Welcome back to Where is the Money? So we had this truce that is now on the table between the U.S. and China. What are the effects? Apparently, JPMorgan has revised its standing of the U.S. going into a recession this year from 60% chance to below 50% chance due to this temporary tariff truce.
JPMorgan upping its recession odds to 60% from 40% previously, citing obviously the tariffs, the effect on business sentiment, the effect on investment, and the effect on and on consumer prices. They said, quote, these policies, if sustained, would likely push the U.S. and possibly global economy into recession this year.
Numbers, what's your hunch? Is the U.S. going to go into recession or not?
Look, I'm going to defer to economists who give it about a 50% chance. I think all these things are probably inflationary a little bit more and slowing down the economy. If there's a recession, I don't know how big it'll be or how long it'll last. Hopefully we'll avoid it, but I wouldn't take it off the table at this point.
Now, according to Business Insider, JPMorgan cuts the chances of the U.S. recession after Trump and China's tariff truce, but risks remain.
We have breaking news right now. JPMorgan has officially dropped its recession calls for 2025 after the latest truce between the United States and China. Previously, JPMorgan had said the United States will likely enter a recession this year, given the fact that tariffs would decimate the U.S. economy, would make prices higher, and would also reduce the amount of goods coming in from other countries. Well, now, after this 90-day pause between China and the United States, in which tariffs are substantially reduced on both sides, I mean, there's still 30% tariff on Chinese goods, but it's substantially less than the 145%. JPMorgan is revising its predictions for the year, saying we're no longer likely to get into a recession. Now, this is interesting because it does show you that the recession fears were man-made in a way, and that the tariffs really drove recession fears on Wall Street and within the big banks.
JPMorgan is revising its 2025 recession prediction after President Donald Trump reached a temporary tariff truce with China. In a Tuesday note, the bank said the chances of a U.S. recession this year had fallen below 50%, down from previously estimated at 60% after Trump announced sweeping tariffs on April 2nd.
If you look at, the trade war and then the somewhat reconciliation between the U.S. and China, does it hold?
I think it's the right thing to do is to back off of some of that stuff, to have an engaging conversation. I'm grateful they did the U.S.-UK deal. It's an agreement in principle, so, there's a lot of uncertainty still, and there's a lot of uncertainty still in the China thing, but at least we started. It obviously calms down the markets. That's not the reason to do it, but the markets, do vote or something like that, and so you'll still have uncertainty to resolve. There's 90-day triggers in a lot of these things, and hopefully they will be resolved. But they're complex. I don't expect immediate resolution, to the satisfaction of everybody in 90 days.
JPMorgan found that the tariff change meant the average effective tariff rate had reduced from 24% to 14%, representing a tax cut of almost $300 billion. So I guess this is a change in the right direction. The markets have returned back to rallying. The confidence is somewhat restored temporarily. Investors are investing. All is well, right?
So JPMorgan and Goldman Sachs came out today and said, we are 100% going into a recession. And they said that the tariffs were definitely the tipping point. Because obviously when you do tariffs like a blanket tariff on absolutely everybody, the penguins into uninhabited islands, we're gonna lose money, especially in the stock market. Quite literally, and all the news sources I see about this, JP and Goldman Sachs are both like, yeah, we just ripped up our predictions straight up because the numbers are just so bad now that there's no more percentages of a recession. We are going into a recession. And quite literally, I don't care what you think, this is all Trump's fault, okay? Tariffs, retaliatory tariffs, are not tariffs that work. Okay, nobody's going to take off the reciprocal tariffs that they're going to put up there, and for right now, everybody else in the world is not investing in us on purpose because we put tariffs on absolutely nothing. Penguins. Not only when Donald Trump gets out of office are we going to have a hard time actually trying to get back to where we were, but countries don't trust us now. They don't trust our economic choices. And people, again, for the 50th time, like I said on this channel, people make economic choices based upon what they think about the economy, who they think is going to run the economy, and what they think they are going to do.
The risk is still there. It's still some unsettling, and the volatility is a good thing in some situations, and the volatility is bad in other. Are the people relieved that this temporary truce is on the table with U.S. and China and the markets is settled? Are they convinced that this is the end of it and we're in the right direction, especially with the U.S.-UK deal? So it seems like some people have not bought into this being the last of the volatility from said president. It can literally take a tweet, a truth post, a comment, a press release for the market to fly again in the wrong direction.
The Cato Institute, what they did is they looked at the tariffs that the White House says countries charged us versus the actual tariffs they charge. Take a look. Vietnam, President Trump said it's 90%. It's actually 5.1% for an 85% difference. We'll go down the list. Taiwan, Switzerland, which is known to not charge almost any tariffs at all. 61% the White House said, it's actually 1.7. Indonesia, where we get a lot of garments from, they're at 5.3. The White House says they're at 64. And very importantly, the European Union. Remember when the president said there was 39? And then we can go down the list. These are important trading partners. Now, of course, there are some non-tariff trade barriers that are difficult to quantify. But the White House basically being accused by people of using a formula that no one has ever used to come up with these tariff rates and then say, oh, we were kind to them and we did half.
So how does this affect us as the everyday consumer? The investors are in a good place. They're going to have money. They're going to scale back when necessary. They're going to dive in when necessary. They know how to play this game. But the average individual that are living paycheck to paycheck, being bombarded with these high prices and inflation, what can they do to weather this uncertainty and volatility? I don't know, but they're going to need to get a game plan fast. Put your comments below. Let's talk about it. This is another episode of Where is the Money? Talk to you soon.